Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I am delighted again to be able to speak to CEO Ian Strafford-Taylor and CFO Richard Cooper of Equals, a leading international e-payments and Forex platform. So welcome, gents.
Hey, good morning, Paul.
Well, massive congrats on this morning's terrific Q4 trading update, with sales increasing over 90% like for £15 million. In fact, I think 28% sequentially on Q3. So, Ian, I suppose you could kick off with what's been driving that incredible top line growth.
Number of factors. Obviously, we did announce the material trade that we did, which was, 1.5 million. But even without that, the numbers are very impressive. And we last spoke to the market in early December because we had passed market expectations, and we had to issue that update. And I think what surprised me, we had our own estimates of where we might end the year, and we surpassed those. Was how strong trading was through December, where let's be honest, a fair chunk of it was were not business days because of Christmas. So the solutions business continues to grow. From a standing start, that contributed over £3 million into the full year revenue numbers, and we have high expectations for that in 2022. But across the board, the numbers were strong. The corporate expense platform went strongly through to the end of the year as well. Again, we expected some tapering off. It didn't happen. The international payments business, pure vanilla FX, was also very strong. Somewhat helped. There was a fair amount of volatility in currencies. It always helps us when stuff's moving up and down. So broad-based on the core, with solutions added on to the top of it, which has been the theme of the last 6 months. I think, the underlying business has been growing nicely, but over and above that, we've got the new revenue stream of solutions.
Yeah, I mean, you did an extra 3.6 million by my count, just in the last 3 weeks of December when half the businesses were shut. So that's a pretty impressive run rate. And now, Richard, is this, what's your sort of view on the sustainability? Because if you take off that one-off large Forex transaction from the Q3 numbers, so you get 1.5 deducted from your 15 million, you get 13. What's the sort of like, just broadly, what's your sort of like sustainability of that, or sort of like that run rate? I mean, are we looking at sort of like a average of £1 million per week in revenues?
I think on average we may well be looking at that. Yes, I mean, we were definitely flattered by volatility in the last quarter, and that's very unpredictable by its very nature. Whether we'll have the same sort of trends as this year. But as Ian has alluded to, the spend platform, which had previously been in the doldrums at the early stages of COVID, is beyond a rapid recovery. It's doing very well. Our core international payments business is doing well. Our white label business is growing, but it's much lower margins. But it's there are crumbs to be had on all these sectors, and you don't turn them away, because otherwise you get nothing. So to compress it, pretty much all silos other than the travel money, the core travel money, is done really, really well. The 3.5 million from solutions in effectively 6 months is a terrific outperformance, and that gives everyone a sort of guide as to what we might expect for a full year for that business. Margins are a little bit difficult to predict. We may see some more competition at some levels, whether it's forwards or other things, but we're definitely holding our own across all that book.
Yeah, you're a prudent CFO there, Richard, because that's the best description of a crumb that I've ever heard at all. when you get sort of like sales up by over 90% like.
I think all investors would prefer a prudent CFO. No,
yeah, that's what I think.
It's early days, but so far in January, we're doing well.
And then what, just Ian, any sort of notable sort of like new client wins? Or it really sort of like existing client base just spending more, or a bit of both?
No, we're not concentrated in one or a few particular clients. So it is broad based. So nothing notable that I feel worth raising here, but we are adding a lot of clients. So it's not getting more out of existing, although we're doing that too. There's definitely the sales process is picking up, and we allude in the statement to increasing our marketing spend this year. That's not above the line TV ads and all that type of nonsense. This is just better collateral, more trade shows to the extent hopefully they're happening, that sort of on the ground marketing, as well as digital, obviously.
It must be getting easier to win new clients though, isn't it, Ian? Because I mean, you've got fantastic reference sites there, and you've also got your B2B sort of like your white label platform as well, with some sort of and you're winning some big clients on your solutions business. I mean, there must be a lot of good customers you can showcase to new businesses.
Yeah, although clearly with customers you need their permission if you're going to do that. But we can do case studies without naming, and but what you find is in the industry verticals, which we're attacking very much on verticals rather than just scattergun, is that verticals tend to be, people speak to each other, and so the word of mouth, particularly with something like solutions, at its heart, is, as the name implies, each customer may have its own requirements for authorization protocols or hierarchies, or who can do what. That's easily configurable into the platform. Some may want one account with zillions of sub accounts, one may want loads of accounts, and a problem for all companies, not just in finance, is reconciliation. And if which we have the capability to do, you can go to a corporate that is receiving money from all over the world from different counterparties, and that they can now give each counterparty their own IBAN, which we can allow them to do. So each of your customers has an own name IBAN. You get the money into an account, it's automatically reconciled because you know where it's come from. And so you're making their internal processes simpler by giving them a solution, right? So that's the power of it. And if a CFO at one company has had that fixed by us, they'll talk to another one.
I think the other
it spreads.
The other great payback is that our successful financial trading and the public nature of our company means that our sales force can be on the front foot in a sales pitch and say, well, look how successful we are. We're not a credit risk to you if you've never heard of us. Look at our financial statements, look at the cash in the bank, look how we're growing, look at our regulatory positions, trust me, I'm a doctor. And that wasn't the case 24 months ago.
And just on that, Richard, just on the cash, it finishes, I mean, it's better than I expected, actually. It's sort of £13.2 million at the end of December. Is that the net? What's the net cash figure? Is it sort of slightly lower than that, is it? Or
11.2. So we've got a C-bills loan of 2 mil.
Yeah.
Which is in abeyance, modest interest, keep it on board for regulatory shocks. Very cheap source of capital. Thank you very much, Rishi. But yeah, no, we're in a very, very good financial position now. Good. And that does allow us to think very carefully about whether we want to still accelerate growth by reinvesting in sales team, higher quality people, and faster development. So the payback, I think we all think that the payback is not necessarily in 2022, it's 2023, off much higher revenue figures.
And what sort of, like, if you add that sort of extra sales and marketing cost or investment alongside the extra product investment, Richard, what sort of percentage of sales are we talking about of sort of like transitional type of investments? Are we talking of, like, I don't know, mid-single digit?
It's not the way I've thought about it, Paul, I have to say.
Okay, give us money, give us pounds, shillings, and pence. Then simple stuff.
You know, our head count in December was 254.
Yeah. Okay.
It might well go up by 15% this year. No, sorry, 7.5%. So it might go up by 7.5% this year. Right. And you know, average salaries are what, 50K a pop, something like that. So that gives you some sort of flavor. Engineering is much more, but it just means that and we've budgeted to bring in contractors to accelerate the build.
Right.
Okay. Definitely, I was trying to do the maths while Richard was speaking. You know, we're talking about, you know, a couple of £1 million extra, that sort of thing.
Yeah. Okay.
So, you know, that's less than 5%, isn't it?
Yeah. Okay. And Ian, what sort of like product investment, what technology are you adding on? Because obviously you've got a pretty complete platform already that seems to be sort of like.
There's always more you can do. You know, I've alluded before to, you know, straight through processing internally and building us so we can scale even quicker and even faster is a lot of it. So it's not necessarily stuff that the customer would see overtly, but at the end of the day, what you're dealing with here is trying to create a platform, you know, which we have the key bits of it already, such that, you know, if a customer receives money in any currency from any customer, it's automatically there instantly, so they can do something with it, rather than, you know, some platforms are run on a batch overnight. If you're lucky, you might see it tomorrow. And you can onward move it at a touch of a button, or you can pay via a card at the touch of a button, and it's all as instant as people now expect in their personal lives, and increasingly expect in their corporate lives. And bit by bit, removing, the more links in the chain you remove, the more efficient you get and the quicker you can do things. And having what I would call domestic clearance in more countries, you know, via the relationships we have, we can now in 42 currencies, you're clearing domestically, not using a correspondent bank and delays. That's what it's all about. So the development is, of course, there will be some product developments. There's more stuff we can do that the customer will see, but also the connectivity and the infrastructure underneath, it's well worth it, as you can see with solutions. And there's more things, there's more solutions we can offer. You know, for instance, you know, becoming direct members of SEPA is just another thing. We're direct members of Faster Payments. So if you're direct members of SEPA, then you can instantly receive euros and it's instantly in the account.
Right. Okay. Gotcha.
It's that sort of stuff.
Right. And what about the consumer side, and how are you seeing that sort of like tracking for 2022? I mean, if you read the press reports, people like Thomas Cook and TUI are absolutely snowed with bookings to the Canary Islands.
Of course they are, because, you know, but bookings don't necessarily translate into actual trips. You know, as we've all learned to our cost. So it's great. You know, the feeling is, you know, Omicron passes through, we're all herd immune and everyone off on their holidays, and that would be fantastic. So there is clearly massive upside for us with the assets we still have in place in B2C travel money, to benefit from any pickup in that, which isn't in our projections or estimates really at all, but it's obvious that it's there. And so bookings don't necessarily immediately correlate. If you look at, you know, people might book months before they go, and probably will have done, but they generally sort their travel money and stuff like that out a couple of weeks beforehand, not now. So it's positive, and I'm hopeful. But I think the theme is, whilst we can talk about £1 million weeks and blah, 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 you know, but we're in mid-January, so let's not bank it. Let's, you know, it's clearly possible. For the company is clearly on a great trajectory, but we, you know, I want to be cautiously optimistic and not coming out with numbers that, you know, we want to beat the numbers. We don't want to be struggling to hit them.
Yeah. Well, just as a data point, my dad's going to the Canaries in a couple of weeks, and he's a shareholder of Equals, so he'll be using
Well, that's
Fair
definitely going to
FX.
move the needle, isn't it?
I know. Well, he'll be using Fair FX, I'm sure. Now, Richard, just turn into you mentioned you've got sort of like 11.2 net cash, sort of like the year end if you deduct the loan from the 13.2. You sort of squirreled that away, and you are obviously a prudent guy, and you don't want to sort of like sort of reveal all the cards. But I mean, it must give you optionality in terms of you're investing organically, but you're still going to be, in my account, generating cash in 2022. So you've got plenty of firepower there. Presumably, I mean, you had a successful acquisition of Effective FX. I don't know how many months it was, about a year ago or something. So there must be sort of like nice little bolt-ons you could consider, I guess.
There are always bolt-ons. You know, if the trick is getting them at the right price. But also following up from Ian's point, with travel business, you know, we can endure a longer period of pain with our cash position than possibly other, you know, less well capitalized companies. So, you know, that really helps us keep that optionality. Again, you know, with that cash position, if there are some stars out there, we can bring on board, you know, to continue to upgrade our teams. It's all healthy, and I think actually having a strong cash position sends a really nice message to other people, you know, recruitees, regulators, you know, other institutions, customers. So we're not going to splurge it. We think it sends a strong message.
And if you think back, Paul, you know, 18, well, it's difficult to remember the years now. 18 months ago, when all of this started, concerns were, you know, people thought we were over reliant, or way more reliant than we are or were, on the travel industry. So there was concerns over revenue, and there was real concern over our ability on cash. You know, what a different picture we're painting now. So I think, you know, in terms of the things that needed to be ticked off for investors, you've got strong revenue growth and cash generation. You know, we're a different animal than we were only 18 months ago. I think the market is waking up to that now. Not least due to your good graces and banging the drum.
It's nothing to do with me, guys. It's all to do with your performance. I mean, I've just run the top level numbers, and if I put a sort of like a 52 and a half sort of like top line for next year, given that 13.5, if that was, you know, sustainable, etc., slightly modest, and then kept my sort of like existing EBITDA at about 8.4 for this current year, then I'm getting a valuation of north of 125. So there's plenty of upside, and I think investors should have a good look at this, because yes, the shares have done well over the last 18 months, but from my just rough broad calculations, there's plenty much more to go. So look forward to that. Now, Ian, just on the news flow then. So we've obviously, this is the year end trading update, and we've probably, when are the prelims likely to be? Is it sort of early April or something like that?
Late March.
Okay, late March.
Yeah, but we should be. They should be finals rather than prelims.
Oh, okay.
So, yeah.
That's the aim.
Okay, and have you got any more sort of like any more sort of under your hat there, Ian? Sort of like, you know, large contracts you made.
Well, if I had, then I wouldn't. Then I would have to have announced it, wouldn't I?
Okay, yeah.
Under the rules of the market.
Yeah, true.
I think it's best for us to, you know, stick to our regular reporting schedule that we've established in the past, and you know, as and when things happen, for sure, you know, we'll come and tell the market about it. You know, we've got an exciting pipeline of stuff we're going to be building this year. You know, hopefully we'll have more to say as the year progresses. But the news that needs to be out there is out there.
Yeah. Well, you do say in your final statement or final sentence, we are extremely excited and confident in the future of the group. So that's always a good sort of like conclusion.
Yeah, it's nice to be able to say that.
Yeah. All right. Well, thanks very much, gents, and look forward in touching base for the finals at the end of March or perhaps early April. So, really well done, guys, and look forward to touching base.
Thanks, Paul.
Thank you.